For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Shares of Palantir Technologies experienced a downturn in early Friday trading as investors reacted to concerns about the pace of artificial intelligence investment. A significant factor contributing to this uncertainty is the instability surrounding CoreWeave's initial public offering, which has raised broader questions about investor confidence in artificial intelligence-driven enterprises. Additionally, a research note from Goldman Sachs has brought further scrutiny to Palantir's technological advancements, sparking discussions about the sustainability of its rapid growth in the artificial intelligence sector. Palantir is known for leveraging its artificial intelligence platform, which enables organizations to consolidate large and diverse sets of data into a single streamlined model. This integrated model serves as a foundation for businesses to develop, train, and implement data-driven processes that enhance operational efficiency. Furthermore, the company places a strong emphasis on its ontology framework, a sophisticated structure designed to link and represent real-world entities, datasets, and business operations. This offering has been particularly beneficial to Palantir's commercial clients, allowing them to extract deeper insights and make data-informed decisions with greater precision. In a testament to its strong financial performance, the Denver-based company, co-founded by technology investors Peter Thiel and Joe Lonsdale, reported fourth-quarter earnings that exceeded market expectations. The company posted earnings of 14 cents per share, reflecting a solid financial position. Additionally, revenue surged by 36% compared to the previous year, reaching an impressive $827,500,000. This substantial growth can be attributed in part to a heightened demand for artificial intelligence-driven solutions. Looking ahead, Palantir has set an optimistic revenue outlook for 2025, forecasting earnings of approximately $3,750,000,000. This estimate surpasses projections from analysts at the London Stock Exchange Group, signaling the company's confidence in its ongoing expansion. Within its commercial segment, revenue is expected to experience a remarkable increase of 54% from 2024, reaching $1,080,000,000. Such an aggressive growth trajectory underscores the increasing reliance on artificial intelligence technologies across industries, with Palantir positioning itself as a leading provider of these solutions. The stock has responded positively to the company's strong financial performance, delivering an extraordinary return for investors. Over the past 6 months alone, shares have skyrocketed by 143%, reflecting growing enthusiasm for artificial intelligence stocks. Moreover, when evaluating the stock's long-term performance, its value has expanded nearly 8 times over the past 5 years. This dramatic appreciation highlights the broader market trend in which investors are actively seeking exposure to pioneering artificial intelligence companies that are at the forefront of innovation. However, with rapid growth comes heightened scrutiny, particularly regarding Palantir's valuation. The company's stock currently trades at an astonishing multiple of 477 times forward earnings. By comparison, industry giants such as Nvidia and Microsoft are trading at significantly lower multiples, at approximately 38 times and 32 times forward earnings respectively. Another factor weighing on investor sentiment is the recent announcement by Defense Secretary Peter Hegseth, who outlined plans to reduce the United States Department of Defense budget by approximately 8% over the next 5 years. This budget reduction, amounting to roughly $290 billion, could have a direct impact on Palantir's revenue stream, given the company's strong ties to government contracts. In 2024, the Department of Defense accounted for approximately 17% of Palantir's total revenue, while in 2023, the figure stood at 18%. These numbers highlight the company's significant dependence on government contracts, making it vulnerable to potential cuts in federal defense spending. As a result of these concerns, Palantir stock has experienced a sharp decline of nearly 27% since reaching its all-time high in mid-February. Investors are closely monitoring broader market trends, particularly those within the artificial intelligence sector, to assess whether this downturn is temporary or indicative of a more prolonged correction. In addition to internal challenges, external market conditions have also influenced investor sentiment. One of the key developments currently under scrutiny is CoreWeave's debut on the Nasdaq Stock Exchange. CoreWeave, a cloud computing company backed by Nvidia, slashed its initial public offering price and reduced its valuation by approximately 35%. This adjustment brought the company's estimated worth down to $23 billion, reflecting investor concerns about the overall demand for artificial intelligence services. The uncertainty surrounding CoreWeave's initial public offering has added another layer of caution among investors evaluating artificial intelligence-related stocks, including Palantir. Amid these developments, a new research note from Goldman Sachs analyst Gabriela Borges, has further fueled discussions about Palantir's valuation and long-term prospects. Borges acknowledged the company's high valuation, but also pointed out the growing importance of its ontology framework, which plays a crucial role in structuring and organizing enterprise data. She reaffirmed her price target of $80 per share while maintaining a neutral stance on the stock. Borges emphasized that for organizations to fully leverage artificial intelligence, they must first structure and contextualize their data in a way that ensures accuracy and operational relevance. This process is essential for enabling customized workflows that can effectively address critical business challenges. Palantir's ontology framework has long been a key component of its artificial intelligence strategy, providing clients with the ability to integrate data and develop tailored workflows. She further noted that as businesses increasingly focus on artificial intelligence applications, Palantir has solidified its reputation as a platform capable of delivering rapid implementation and measurable returns on investment. However, she also pointed out that the company's fundamental technical capabilities have not significantly evolved over the past year. Instead, the broader market has only recently begun to recognize the value of an operations-centric data platform. Despite acknowledging Palantir's unique technological positioning, Borges cautioned that the long-term trajectory of artificial intelligence development remains uncertain. She raised the question of whether the process of building custom artificial intelligence workflows will become more accessible as the technology ecosystem continues to mature. This uncertainty presents a potential risk to Palantir's long-term growth strategy, as increasing competition and technological advancements could influence its market positioning. At the close of early Friday trading, Palantir stock experienced a decline of approximately 2.82%, bringing its opening price to $87.54 per share. Investors will continue to monitor both company-specific developments and broader market trends to gauge Palantir's future performance in an evolving artificial intelligence landscape. Palantir Technologies saw its stock decline in early Friday trading due to concerns over artificial intelligence investment, CoreWeave's weakened initial public offering, and a Goldman Sachs report questioning its technological advancements. The company, which helps businesses integrate data through its artificial intelligence platform and ontology framework, reported strong fourth-quarter earnings, with revenue surging 36% year-over-year to $827,500,000, driven by rising demand for artificial intelligence solutions. Palantir projected 2025 revenue of approximately $3,750 million, with commercial revenue expected to climb 54% to $1,080 million. Despite its stock soaring 143% in 6 months and nearly multiplying by 8 times over 5 years, concerns persist over its valuation, which trades at 477 times forward earnings, far exceeding industry peers Nvidia and Microsoft. Further uncertainty stems from Defense Secretary Peter Hegseth's plan to cut the United States Department of Defense budget by $290 billion, potentially impacting Palantir's revenue, as government contracts accounted for 17% of its earnings in 2024. Additionally, CoreWeave's decision to lower its initial public offering valuation by 35% to $23 billion has raised doubts about artificial intelligence demand. Goldman Sachs analyst Gabriela Borges maintained a neutral stance on Palantir, highlighting its strong technology, but questioning whether custom artificial intelligence workflows will become easier to develop as the industry evolves. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.